Yes, hello folks. Good night to everybody. I hope you're okay. I hope you have been able to buy, at 125, 130, 135, 140. Right now we are cruising at 155 after hour Clov. We're in good shape, and I think really that I've been a little bit too conservative, targeting $2 in the first day of September. I'm trying to see this story on another angle. Basically, how I see this story going is that, as you can see in the chart, let me have it in front of me. Basically, I think when we will arrive at $2, certainly around earnings in August, we will be maybe already at $2 at that moment, with the market anticipating great earnings. Let's see, hoping. You need to know when you look at this chart that the zone of $2 will be big fight. Big fight because for several lines are crossing over there around $2. That's mean that over there you will have a lot of people coming in, coming out, going in and out, because it will be a kind of turning point for Clov. The naysayers will try to go out to recoup their losing, or basically saying I was buying at $2, 1.5. I'm going to take my money out, so I'm avoiding losing money. All kind of reaction will appear around $2 for Clov. Nobody really know how this thing is going to go. You can have Clov coming back down to 1.5, and from there running. All depend a lot of things: the calls, the puts, the option chain, the short covering. It's a little bit tricky, because there is the downtrend on Clov was so long that you have all kind of people in the story. Don't forget, for example, that Vivek was buying heavy at 114. So that's mean that when we will be at $2, the guy, who have been putting $1 million will have, some kind of 75% profit. You don't know what's the plan. This is maybe just the beginning of a buyback or insider buying. Some will be going out, some will be going in. Difficult. What I try to focus is the chart, and what I see is that if we pass this turbulence zone of $2, it will repeat. I think it will be a big fight over there. A lot of things that will be maybe unexpected, because you can have $2 and then the stock stop going up, going sideways. You will have people trying to figure how much money they have been making, and just going out because they say, well, I was buying at 90 cents, 80 cents. At $2 I'm doing a lot of money. And maybe the price will continue shooting up because the earnings will be incredible, and the market will recalculate the value of Clov. A lot of scenario are on the table. From what I see, I know it's a little bit optimistic, maybe, but it's good to be optimistic sometime. We have been suffering so long with Clov that it's good to see the story on another side. What I see is that if we cross on high volume this $2 zone, we may going to the $6.57 per share pretty quickly. Pretty quickly. I know it's a big jump. I know. I'm not stupid or crazy. But as you can see, looking at the chart, is that from the $6-7 zone to the downtrend line going to $2, there will not be a lot of resistance. And don't forget that the short, we still have around 35 million shares short that need to be, they need to cover. And if you have great earnings, retail coming in, technical buyers coming in, the market recalculating the value of Clov, if all this come together and you have the squeeze, you may see $7. Maybe at the end of the year. I don't know. It's so difficult because Clov have been changing business model so much that we are talking about another company, that the one we were talking about back in 2021. It's another story, less gross revenue, but more profit margin. So the market, as you know, like the high growth stock with high profit margin. Revenue, gross revenue doesn't mean anything. You have big company doing, $30 billion per year of gross revenue, and the market, just don't care. That's, you have tons of value company who are not expensive if you compare it to the gross revenue, but basically the market don't buy it because no profit margin and no growth. So here now with Clov, we are talking about a new company with another business model incorporating the SaaS story. And it's very difficult to have a clear target. Even the chart, can be confusing because with the chart, you don't know what's the importance of the shorts who have been pulling the price down artificially. What about the retail who have been running out, who have been buying at $2, $3, $4, or 60 cents? A lot of different profile of investor are in Clov. But if we try to have some kind of roadmap in our head, $7, it's not insane, technically speaking. $7 will mean, if I remember well, with the float, will mean that the value of the company will be around 3 billion to 3.5 billion market cap. If we are talking about a company having a good profit margins and a good growth will be, we are speaking about growth of 35 to 45% a year. And if you have good profit margins with that growth and the SaaS business picking up and taking, some kind of importance in the revenue of Clov, we are talking about a new animal, So, as you have been looking at the video of Al stock, I've been calculating intrinsic value of Clov, and sometimes we arrive at crazy numbers, of 20, 30, $40 per share, and even more in the long run. Well, I don't say it's not true, because you have some figure and numbers to back up that kind of prediction. But I just try with the tools that I have in my hands to have a target. So my plan is a big battle at $2 during the summer. The battle may be just a little stop before a big run, maybe a stop of 3 months with the price running upside down, $2.20, $2, $1.80, $2, running around. You can swing trade if you have the guts. I've tried to swing trade today and I missed it because Clov is very strong. I was very surprised today with the Friday expiring day of option to see Clov so strong. And I've been trying, in the morning to take advantage of the situation. I've been selling at 148, hoping that we retrace at 138 and to buy more shares. When I saw that Clov was solid and there was absolutely no weakness at any moment, I say, okay, I've lost. I reload, and I've been buying again the same amount of shares at 147, 147.5. With the commission and all that, I just didn't make any dollar on this trade. But I've been trying to increase the number of shares that I have by going out and in at a low price, and I missed it because Clov is very strong, and I see absolutely no weakness all day long. This let me think that something very big is brewing. We are underestimating, the shift in the business model of Clov. The market have already an idea of the real value of Clov, and for them, as I look at all the tools that I have, they think we are going a lot higher. That's why for the last 30 to 45 days, they are not shorting anymore, even with the run-up. Normally when you have a stock running from 0.60 to 155, short, try to short again because, they just try to play the yo-yo and make some money. And what I see is that even with the price back above $150, they are not shorting Clov. And that gives me the message that the market know we are going a lot higher. That's how I see it. Now, if the story is, very rosy, it's not out of question that we see it's $6 to $7 pretty quickly. Again, remember Oscar, when it was at $2.5 back in January 2023, the run to $10 was pretty quick. That was a 4-bagger. Now, if we consider that the real floor of Clov, because we have been at 0.60, but that was a very short period. It was a period where people was thinking we're going to be delisted and going to bankruptcy. So it's a kind of artificial. I think if we take a kind of average price of $1.5 to $2, who was the normal price of Clov before this fall down to 0.60, and if you do a four bagger from there, you arrive at $6 to $8 for Clov. And that will be the same scenario of OSCR back in 2023, who have been running from $2.5 to $10. So we are not talking about, we are not throwing insane numbers, crazy story. This already happened in another company. But, in life, we all have our bad and good days in trading. It's always good to be a little bit cautious and, not pessimistic, but trying to be aware of what's going on. That's why I will be watching daily what's going on with the shorts, what's going on with the dark pool, what's going on with the option chain. And you will see, if we go to $6 to $7, you will see a big shift in the way some analysts talking about Clov. Actually, they are talking of Clov like loser, because the fall down, because it was a kind of meme stock, because they don't really follow in detail what's going on in Clov with Andrew and SAS, and they don't know the details, like the one who are watching this day by day. But that's the good part of Wall Street. If you do your due diligence and you are focused and you know what's going on, you can do a lot of money in the market. Personally, my strategy in general now in 2024, I'm focused on the company who are just above $1, so we avoid reverse split, bankruptcy, or all kind of manipulation. I try to find company who are just emerging of $1, have a great brand, a great business plan, have some cash, not too much debt, and basically trying to ride the wave back up. For example, because, I talk about Clov, but I'm trying to be a little bit diversified, even if I have a lot of money in Clov. Will not hide it. Full disclosure. I've taken a huge position, not like Clov, but pretty huge, in Polestar. I think the code is PSNY. Let me verify so I'm not saying stupid things. PSNY, yeah. I take a pretty huge position. Why? Because Polestar, it's a kind of spin-off of Volvo, with a big brand, who is backed by Geely. The owner is Geely, Chinese with deep pockets. Polestar, I don't know if you have it in the States, but here in Europe, they are considered to be great cars, reliable. People who don't like Tesla usually buy a Polestar. It's a more, how can I say, it's a more classic car, less sporty or less low seat, a little bit more conservative, regular for the people who don't want to have too much eyes on them. And Polestar is not, it's not some kind of little company full of debt and with the people, talking about melon and all this stuff. This is all fluff, pump and dumps. Polestar is a real company with real people behind it, with full of cash. It will not go in bankruptcy, So Polestar is just going out of $1 zone, and the plan is pretty simple. It's to buy all I can. That's what I've been doing at $1, because actually we are just above $1. They need to, I think, to trade 10 consecutive days above $1 to avoid being delisted in the next 6 months. Actually, they just close above $1 this Friday. And I like the chart. I like the fact that when we were going to exit the 125 zone and we are going to be crossing above, I see no resistance until 175. So that's 75 profit, 75% profit. It's pretty good. And if it happened quickly, I will be more than happy to drop the profit in Clov and increase my position in Clov, hoping that Clov will not be cruising already above $2. But anyway, because let me tell you another thing. I know it's already 20 minutes, no matter. And again, excuse my English. I'm a French-speaking guy, so I try my best. So if sometime I'm hesitating or using the bad words, forgive me. I try my best. Let me explain you something. Sometimes it's all about psychology. Okay. Sometimes it's more comfortable in every aspect to buy a stock who is in a run, how can I say, a run, but not a crazy run, not a pump and dump, a sustained run, as I see Clov and Polestar. And it's sometimes is better that you go in at a price that you feel that you are in good shape, even if you pay more. Example, Clov. Clov, I was completely out of Clov. Always I've been keeping an eye on Clov. I see the bloodbath. I was scared to death that this project's going to bankruptcy. And I see the price going to 0.65. And I was tempted to buy. But I didn't do it. Why? Because I say to myself, these people, they are running a company, they don't really care about us. That's normal, They want the company to succeed, and what's happened to us is not, it's not the priority. So I didn't buy over there. Why? I say maybe these people are going to reverse split, or being just bought out by another company who are going to give $1 per share because it was cheap. I didn't feel comfortable, and I didn't buy. And I say to myself, if Clov go above $1 and stay there for a certain number of days, at that moment I will feel okay to buy. And naturally, I didn't catch the best price. I pay personally, I pay, I don't really remember because I've been doing a lot of in and out. But I think I've been beginning to buy at 110, 115, 120, 125, going in and out, but that was not very interesting with Clov because the run-up was pretty strong. You know, it was not pump and dump or some kind of big move on the upside and downside. So it was not a super strategy to do that. In the case of Clov, the best thing to do actually is to buy on dips. Buy, bring dry powder and, you know, accumulate. And that's what I've been doing. I try sometime to going out and in to increase, but it was not, you know, not very interesting. But what I was trying to explain is that it's like Polestar, PSNY. Yeah, you can buy at $0.70 Polestar back in two weeks ago, I think. But I don't like to buy this kind of company at that price, because you know that under $1 you are in danger zone. A lot of tricky things happen when you are under $1. The short manipulate, the company trying to do crazy things. I've been burned so many times with company under $1, you know. I don't touch it anymore. Yeah, people are doing money, but I don't feel comfortable. I prefer to do my due diligence, and when the company taking a new way back up and stay above $1, I come in at that price, even if it's not the best price. That's important to feel comfortable, because sometimes you may catch the best entry point, but you catch it being lucky and you are afraid. Every day you are hoping and that some kind of bad news don't hit the market. So now I'm focused on Clov and Polestar. Polestar, I will not stay over there for long because it's not so clear like Clov for me. It's more kind of technical catch-up trade. Certainly that at 175, I think I will be going out. I think depend the volume, the short squeeze and all that. Difficult to say. But really, and I'm trying to be honest with you, Clov have the profile of company that if you sell at any moment, you may regret it. That's the problem. Let me tell you why. Imagine that if we go to $7 per share, that's mean that the market think that Clov it's for real. And if Clov is for real and is making money with great margins and good growth, you may think that $6-7 in 2025, 26, 27 will be pretty cheap. Imagine, I've been buying at, let's say, 120. And the price arrived at $6. I have some kind of five bagger, okay? Imagine I put $100,000. That's mean I have 500,000. Big money. You can buy a house. But after that, I buy my house. I'm happy. I send flowers to Andrew Toy. And then I see 1 year later that Clov is cruising at $25 per share. What's going to happen in my mind? Because in that case, we are talking about a 20 bagger. That's huge. That's a life changer. I mean, if you put $100,000 and you have a 20 bagger, that's mean you are pulling out $2 million. That's another story, folks. That's mean you buy a house and you buy 3 others that you rent, and you have $3,000 to $4,000 dropping every month. Ha! You know? So many people I know, and I'm not joking, so many people I know have been doing big money buying Google, Amazon, Tesla, Nvidia, AMD, big money, 2, 3, 4 bagger. But they have been putting a lot of money. That means that, again, when you put $100,000 in Nvidia at $50, and then you see $200, that means that your $100,000 now have the value of a house. So you are pulling out. If you have not pulled out before, like a lot of people. But what happened when you see that the shares that you have been selling are cruising above $1,000 per share? You become nuts. You become nuts. And that's my big problem with Clov, to be honest with you. I'm afraid that when we will see $6, $7, imagine in Christmas 2024, call me crazy, maybe, we will be jumping on our shares. Thank you, Vivek. Thank you, Andrew Toy. Wow, Clov is for real. All the naysayers was dumbass. You know, everybody will be screaming, jumping, and talking. And maybe the $6, $7 will only be the beginning of the story. Like Nvidia, like Tesla, like Amazon, like Google. Only the beginning. Remember, folks, that Clov come into the market at $10 and run, if I remember well, above $20 back in time. Some people who have been buying over there, when we will be at $6, $7, they will be in red. Yeah. So again, I told you, everybody have another profile. What I can say is that my feelings, I say feelings, is that Clov is a story for the long run. That's mean that like I told you last time, not in the other audio, I understand that if you can buy a house, it's very tempting. What do you want me to say? Yeah, it's very tempting to say, wow, no more rent. Oof. It's over. I only need to think about university, foods, insurance, holidays, car. But never forget when you do that, and that may happen quicker of what we think. That's why I'm talking about that right now. What about your feelings if you see 12 months after $25 per share? That's huge. That's hard. That's hard. Because, again, I repeat, $7, if you have been buying at $1, it's a big story. But what about $25? That's another scenario. That's a life-changing trade. Only one trade in one company change your life, your entire life. That's not a detail or something to be, or something funny. It's something very serious. And it's not, let me tell you this, it's not every day that you can find a company who have been trashed like Clov, like Polestar, that survive, make money, and become a big player in the market. It's not easy to find that. And when you find it, you need to be very strong mentally to ride the wave and to say to yourself, now that we are trading at $6-7 per share, that's mean we are not talking about bankruptcy anymore. That's mean that all the shorts are out of the way. And we may be just at the beginning of the story. Again, OSCR, Oscar, $2.5 in January 2023, run to $10. What happened? Four-bagger, a lot of people selling, and the price dropped. I think it dropped, if I remember well, it dropped to $5-6 from $10. It dropped. A lot of sellers, a lot of shorts, And then, from $5, a run above $20, another four-bagger. So, in this kind of company, you need to be at the right place at the right moment. And if it's not the case, look at, I repeat, look at OSCR. Now, the price dropped to $16, 16, from 22, 23, I don't remember, something around that. Yeah, it's a drop, okay. But what about the guy who sold during the fall down after the $10, who sold at $6, $7? Now he wants to come back in. Unfortunately, he will never see the price under $13 again. Maybe if there is a miracle, a bad quarter, some kind of rumor, I don't know. Because maybe OSCR dropped crazy earnings in August, and bye-bye, OSCR go to $30 per share. And what will happen in the brain of the guy who sell during the fall down at $6? He will never be able to reload again. He will be waiting, like now, he say, oh yeah, the price is back down from $20 now to $16. Let me wait a bit, maybe I catch it at $10. And maybe OSCR will never be under $15 anytime during your lifetime. You need to think about that. Excuse me to be long, but you really need to think about that. That's mean, and now I'm going to finish saying that. That's mean that we all can make errors, okay? Today, when I sold at 148, it was possible that suddenly the price run to 160, and I will be, biting my hands, slapping my face, saying, stupid guy, now you need to pay more. because you sold trying to, have a better entry price. But sometimes you need to accept, okay, I sold OSCR at $6. Okay, now it's back to $10, but the earnings are great. Okay, I'm going to pay $11. It's true I've been selling at $6, but now I see that the intrinsic value is $20.25. I can buy it at $11. It's a new story. Let me buy it again. I will have less shares, but that's life. I missed it. But I will not miss the run from 11 to 25. And accept the error. That will always happen. And you need to see a scenario at the reverse. I used to have, I don't remember, an amount of shares of Clov that I've been buying at $6, $7, $8 back in time. Now I have 10 times more shares. If we go back up at that price, I will have 10 times more shares than back in time. That's great too. You need to accept the bad move and the great move on the upside and the downside. You need to focus on what I need to make money. Okay, I pay $11 for ESCR. I sold at $6. Bad trade. Let me ride the wave from 11 to 25. No matter. It's fresh money. You cannot always be right. You can avoid being too much on the bad side of the story if you are an active trader looking closely at the chart, at the volume, at the short ratio, at the dark pool. You can avoid big errors. But accept the little errors. You need to accept it. Okay, I have less shares, but at least I have shares. And we are going up. Like I told you with Clov. Right now I can be slapping my face. Why I didn't buy at 0.60? Now it's 1.55. Oh, why I didn't have the guts? Because I didn't feel comfortable. I buy at 1.15, 1.20. It's less interesting in the short term, but at least I feel good. And for the one who have been buying at 0.60, great for them. Great for them. Okay, thank you for listening. See you next time.